Good day, you're watching Businessworld Live. I'm Danie, Laurel.
And I'm Delos Santos. Here are today's top stories. The Senate realigns millions worth of confidential and intelligence funds in the 2023 budget to other programs as it unanimously approves the spending plan for next year.
As price increases loom for noche buena items, the Trade Department says it can only appeal to manufacturers to ease up on price hikes.
A recent study shows that Filipinos are borrowing more as inflation continues to bite.
And more than 160 IT-BPM projects are seeking to transfer from the Philippine Economic Zone Authority to the Board of Investments. Let's begin our broadcast with the Senate approving the 2023 budget on third and final reading, but not without realigning at least 170 million pesos worth of confidential and funds to other expenses. The chamber passed the 5.268 trillion peso spending plan on a vote of 21-0 on second and third reading on the same day as it was certified as urgent by President Bongbong Marcos. The bicameral conference committee will meet on Friday, November 25th to reconcile the versions of the budget that have been separately passed by the House of the Representatives and the Senate. The Senate realigned a total of 120 million pesos of confidential and intelligence funds, or CIF, from the Department of Education to the agency's maintenance and operating expenses, or MOOE. Now, this leaves the DepEd with 30 million pesos worth of CIF. The Senate also moved the CIF of the following agencies to their MOOE. Department of Foreign Affairs, 5 million pesos. Department of Justice, 19.2 million pesos. DSWD, 2 million pesos, the Executive Offices, 6 million pesos, and the Ombudsman, 20 million pesos.
Now, the World Bank expects the COVID-19 pandemic to cause long-term scarring of human capital development in the Philippines, which could lead to more Filipinos becoming poor. In a report, the World Bank said over 50% of Filipino households estimate that their children's learnings from remote classes are less than half what they would have learned from face-to-face classes. This proportion increases to 68% in poor households. The World Bank added that extended distance learning is expected to have reduced the learning-adjusted years of schooling by over a full year. Aside from learning loss, the multilateral lender said the skilling associated with prolonged unemployment could also lead to sizable future earnings losses.
Now, how far can a 1,000 peso bill get you these days when it comes to buying food for your noche buena? Well, not so far, as inflation continues to soar with just a little over a month left until Christmas.
And because noche buena items are not covered by the suggested retail price, the Trade Department says they can only appeal to manufacturers to ease up on price hikes. Shaila Francisco with the details.
Fruit salad, ham, and queso de bola. These are some of the staples in every Filipino family's Noche Buena. Consumers may have to spend more for these items though, as some have gone up by 50 centavos to as much as 42 pesos a month before Christmas. Question is, can you still enjoy Noche Buena with a limited budget? That's what we tried to find out when we went out for grocery today. With a budget of 1,000 pesos for a family, we first bought ingredients for spaghetti. The cheapest we can find is this 400-gram noodle, which is around 39 pesos, up from last year's 33 pesos. Spaghetti sauce, meanwhile, starts at 46 pesos. And ground pork to top it costs around 83 pesos. We also bought ham. However, since some brands now reach almost 900 pesos, we settled for a 313 peso ham. We also included chicken at 220 pesos. Of course, who can forget the must-have dessert, the fruit salad? The largest size of fruit cocktail is at 288 pesos. That's why we went for the smaller size at 81 pesos each. For all-purpose cream, we were surprised that a 250 ml size from a known brand now costs 75 pesos. Whatever's left of our budget, we used to buy cheese at 55 pesos. In total, I spent around 994 pesos and 50 centavos. But I wasn't able to spend on queso de bola. Sandwich spread, elbow macaroni, and tomato sauce, all of which hiked prices. The Trade Department notes that these price guides do not fall under the suggested retail price since they are not considered basic necessities. But DTI says they are in contact with food manufacturers to ease the burden on consumers.
Kinakausap din namin yung mga manufacturers para yung mga products na binibili ng karamihan, alalayan lang yung pagtataas. Reduce the price of their products that are meant for the mass market. Kasi karamihan ng mga producers, meron namang range. Meron yung mura, meron yung mahal.
The DTI advises consumers to take advantage of promo bundles which are cheaper by as much as 70 pesos. Shaila Francisco, we are One News.
A United Nations brokered deal allowing exports of Ukrainian grain from the Black Sea will be extended. What does this mean for hunger and food prices around the world? Madish Kabash explains in this Bloomberg Quick Take.
There is a reason Ukraine is called the breadbasket of Europe. Before the war, it exported more grain than the entire European Union. Those exports collapsed when Russian forces invaded and blockaded 3 of Ukraine's main ports. By mid-year, about 25 million tons of grain were stuck in Ukraine, leaving the Middle East, Asia, and Africa scrambling for other alternatives. At the same time, the price of wheat soared, contributing to food inflation. In May, the UN said 43 countries were at risk of famine. But then in July, Turkey and the UN brokered a deal that allowed exports to resume. And now that the deal's been extended, this is why it matters.
So the way to think about this grain deal and the extension is to imagine what would have happened if it was cancelled. Since it began, the first ship left on the 1st of August from Odessa, 9.5 million tons of food, mainly grains, have been put onto the world market that would not have been there. Food prices, according to the UN, came down 14% over 5 months. That has relieved pressure on inflation rates across the world. And there was a moment just a few weeks ago when Vladimir Putin decided to suspend the deal over the Ukrainians attacking the Black Sea Fleet. It only lasted a few days, so it wasn't a given that this would happen. In the end, it was all tied up because of a deal to allow Russia to start exporting ammonia again. But hopefully, this will allow grain to flow through to next year. Perhaps if Ukraine can get back to its normal levels of 45 million tons, there'll be a lot less pressure on food prices.
Let's pause for a quick break, but coming right up after that. PLDT says it's giving Dito Telecommunity more time to settle its contractual obligation of more than 400 million pesos.
More of that and other stories when Businessworld Live returns. Stay with us.
You're still watching Businessworld Live here in One News. I'm Delos Santos.
And I'm Danie, Laurel.
The Board of Investments tallies 163 endorsements of information technology and business process management projects seeking to transfer from the Philippine Economic Zone Authority or PEZA. That's according to the Trade Department. The DTI says PESA endorsed for transfer the 163 projects under the IT-BPM sector with a total investment of 13.9 billion pesos. 55 of said projects have already paid the administrative fees and are being processed. The transfer of registration allows IT-BPMs to offer 100% work from home arrangements while still enjoying fiscal incentives under the CREATE law. Registered IT-BPMs have been given until December 31 to transfer registration.
The Senate casts doubt on a rosy revenue forecast for the Philippine offshore gaming operator or POGO industry. During a debate on the potential phase-out of POGOs, the Philippine Amusement and Gaming Corporation or PAGCOR projected the industry to generate 10.23 billion pesos in 2027. PAGCOR said the gradual increase it sees in income is based on the increase in POGO licensees. Now, Senator Win Gatchalian, however, called the forecast ambitious after the industry peaked at 8 billion pesos in revenue in 2019. Gatchalian also pointed out that the forecast was susceptible to events such as a crackdown on Chinese gambling. Now, former Finance Secretary Margarito Teves also raised the potential harm that continued operations of POGOs could do to the Philippines' bilateral relations with China. Teves also warned that continued POGO operations could further hurt the economy and bring about social costs.
The PLDT Group said it is giving Dito Telecommunity more time to settle its unpaid contractual obligation of 430 million pesos. PLDT and Smart President and CEO Alfredo Pandillo says they're being as patient as they can, but they're still claiming what Dito owes PLDT. He added that their teams continue to work with Dito to find the best settlement. In October, PLDT warned that in case Dito does not remedy its material breach by November 4, it might look into, quote, legal options including suspension or termination of services. Dito, however, believes that there was no material breach, but it said would, quote, thresh out and exhaust all available remedies to settle the matter.
A survey shows that Filipinos are borrowing more due to lower income amid high inflation and the lingering impact of the pandemic. According to a survey by consumer finance company Dito, 22% of respondents considered borrowing more frequently than usual. 13% reported plans to borrow around the same amount, while 10% have applied for more loans. The survey covers 130 respondents who have previous experience in online borrowing. Dito says the increased demand for credit among Filipinos stems back to rising expenses and a decline in income. This as 55% of the respondents reported an increase in expenses over the last 12 months, while 41% saw their earnings decline.
We might actually see more of that happening, especially as the Christmas season approaches.
Exactly. Mahirap yan, no? Nangungutang just to get by, not even for investment.
Hindi pa naman na mabibili mo na sa 1,000 sa Noche Buena.
Oo nga, na lang.
Those are the biggest stories on the economic and corporate front today. I'm Jess Delos Santos.
And I'm Danie, Laurel. We are One News, all sides, all the time. But don't go away. We'll give you the latest on the local bourse and Businessworld Live returns with us. mind, you're still watching Businessworld Live. Now, Jess, equities feeling quite euphoric these days, but is it time to get in? Only upwards na lang ba? What's your feeling here? Anyway, weighing in, we have with us Tina Ulang of First Metro Investments. Hi, Ma'am Tina. Good morning. Welcome back.
Hello. Hi, good morning.
Ma'am,
Thanks for having me, Danie and Jess. Good
let's
morning.
talk about the main issue that's been hounding the peso, that's been hounding and maybe even the equity space, which is the Fed aggressive rate hikes. Now, the recent pronouncement is that maybe they don't need to hike rates by 75 bips. You've got BSP Governor Medalla saying, baka this rate hike, massive rate hike cycle might be over. Do you believe that? Is that already going to be unwinding, and what does that mean for equities?
The biggest risk in the US and the one that could potentially weaken the dollar is really the fears of recession. So if you're going to look at the yield curve, US dollar bond yield curve, it's already pointing to a recession. So the spread between the 10-year US Treasury and the 2-year Treasury is wider at 77 basis points. No, that's a reversal of the previous 1% lead, meaning higher 10-year than the 2-year. So the market is already pricing in a recession, a soft landing, maybe, hopefully not a hard landing, and that's really what is happening and what's impacting the dollar now. If you're going to look at the dollar index, it has actually reduced, corrected, like from peak of like 112 at the level of that amount, it's now down to like 105, and we're seeing the benefit of that in terms of the peso correcting to like around 57.30, coming from a high of like 58.99 last September 30. So markets are pointing really to a slower Fed rate hike because of the recession fears and slower economy in the US, and inflation hopefully peaking from the last print was like 7.7%.
So, and you already touched on this, but so what does this mean for the peso, especially after we did see it strengthening at its strongest level yet since September? So moving forward, what's going to happen to the currency?
What's gonna drive the peso is really the real demand for importation, and if we're going to see inflation correcting, that means the imported food and energy is going to be a lot cheaper, and therefore inflation will come down, and the peso will not be as under severe pressure as before, when we have the oil prices hovering around $140 per barrel. Now it's down to like $85 per barrel, and hopefully the passage of more grains and fertilizer coming from Ukraine benefits the whole world, and food prices could come down. So our import bill is not going to be as big as last year, and therefore the peso will have room to breathe, like stay around 57, and we won't see the heightened volatility that we have seen like 2 months ago, and that's going to increase confidence, business confidence, and of course investors' confidence.
Ms. Tina, what is the recovery story looking like here? Because it's very confusing. From an economic point of view, you have even the World Bank saying the pandemic scars will be so deep, especially when it comes to education of people, no? But then when you look at the inflation story eating into consumption, but when you look at the earnings, they've been pretty good in the third quarter. What does this mean? Where are we in the recovery path compared to what was being expected?
What we're seeing is 2023 would be a period of a little moderation in terms of our GDP growth, because this year we're going to see like GDP growth above 7%. So it's a great recovery story for this year, and corporates have benefited. Corporate earnings have surprised for most of the blue chip companies above expectation. Only a few were below expectation, and so next year is going to be a bit of a deceleration, but still we're going to be there in the average GDP growth, and there will be room for corporates also to still grow in terms of their earnings, because there are specific industries that are going to benefit from the reopening story and from the higher interest rates. So not all are affected negatively by inflation. As we see, the banks have posted very robust record high third quarter earnings, how much, 10 billion for BPI and 16 billion for BDO. 8 billion for Metro Bank. So very good showing from the banks, benefiting from the good spread on the loans. And the property companies are very resilient. There's reopening for the malls. Foot traffic is already back to pre-pandemic, and the rentals are back to pre-pandemic. So it's a good showing so far. But next year, it's going to be a bit of a deceleration, but the benefit of lower inflation and stable peso is going to inspire still market participants, and the corporates, benefit the corporates as well in terms of their debt servicing capacity and then the balance sheet requirements.
Ma'am, what about the cyclicals, the hardest hit, no? So the tourism sectors, some are saying these are discretionary. People might be spending more, for food and things, but big ticket items, travel, tourism, the airline industry, how is this going to be affected next year? And are you still placing your bets on that?
Very positive. We're already, tourist arrivals is already on track to reaching 2 million. The latest number was 1.8 million for the entire year. Year to date, that's already above the 1.7 million target of the government. So we are very loose in terms of our travel protocols, and if China is going to be recovering next year, then we will see a lot of travelers from China, and as the forecast show, the GDP of China is going to be recovering to around 4% from this year's 2.8%. So that's positive for the travel.
Ma'am, this
because
even
there
with
was
the recession that you were mentioning, because sorry to cut, but you mentioned there's a looming recession and then inflation biting in, still these expectations.
So the recession is confined to Europe and in the US.
Okay.
Those are where the recessions are at risk, greater risk of recession. But in Asia, happy to say that we are projected by the IMF to be the growth driver of the whole economy. Actually, the global economy is going to be avoiding a recession potentially next year, only because of the growth that we will be seeing in India and China. India is expected to grow 6.4% acceleration for next year, coming from 6.4 this year. China is 3 to 4% coming from 2.8. So these two countries have very good positive spillovers to the rest of Asia, and Asia is a growth center. So it's not an entire global meltdown, global economic meltdown, but we will have regions of growth, of very upbeat growth dynamics, which is Asia. And so we're very fortunate to be here, and that's going to be causing some portfolio reallocation. Foreign investors in the US are going to be looking into Asia again, reviewing, and the latest we're hearing is that there are a lot of strategic investors already interested in Asia. So I hope we just get a piece of the action there.
Now, from tourism, of course, one of the major bright spots, at least for the year, you have mining stocks. So what's your outlook here in the sector, including energy stocks as well? That's on the back of a projection of an energy crisis next year. But at the same time, you have, of course, partnerships here, talks between the U.S. and the Philippines in terms of the development of mineral products here, like nickel and cobalt. At the same time, like what you mentioned, geothermal as well in Mindanao. So what's your outlook here in the sector?
Well, mining companies have had a great year last year. No? The prices of commodities, minerals, metal, base metal have all gone up. But the cycle is reversing. There's going to be a moderation also because of there's going to be recession, and so the demand for metals and other minerals is going to be a lot softer this year. But there are specific segments, like for instance nickel, where you will have a deficit because of the demand for electric vehicle, and hopefully coal is able to recover, although there's going to be a bit of a moderation in the price. That's why you see Semirara Mining at somewhat correcting from the very peak of 41 pesos per share. So, and nickel also has corrected because of this global recession fears and the sentiment becoming a lot weaker towards mining. But overall, there will be continuing deficits in some of the specific segments like electric vehicle, important inputs to nuclear energy like your uranium, and of course some those in the ESG space, of course, you have your LNG, you have your still oil, and there is this price cap that's being talked about between Russia and essentially the West is going to have some price cap versus Russian oil, and it's going to benefit the price trajectory of oil is going to be a lot lower, and so electricity prices are going to benefit from that projected slide, and from the oil and energy prices a bit more stable next year, going into next year than last year, right after the Ukraine war. So a lot of stability for fuel prices benefiting our electricity energy sector, hopefully, and of course the peso stability.
Finally, ma'am, the index. Is it time to be re-entering now and your targets?
You should have accumulated as early as
Oo
like
nga eh.
2
We were
months
talking
ago.
about it
In
earlier.
hindsight, this again is hindsight analysis, because 5,700 we were in bear zone, and some brokers were already saying buy your favorites, because we are seeing possibly an end to the jumbo rate hiking by the central bank, speaking of inflation, and therefore you should have position. But it's best to accumulate. Some names are still very cheap, those in the property sector and some consumer names. The banks have a tendency to dip, and so buy on dips, and then be very tactical when it comes to the equities market, because the equities market is filled with uncertainties. It's not like the bonds where you just lock in and then enjoy the accrual income. But here you're trading, and it's an active market with negative news flow right here and there. So you've got to be very proactive, and then position now for the first quarter optimism as usual. The very strong
your targets.
seasonality, strong season, December
target
and
level.
January.
Target
For
level.
what?
For 12 months. Target level.
For 12 months, we have yet to assess. We have this FMIC Capital Markets briefing, and we'll be
Sige.
announcing it January.
Okay,
For this
we'll wait
year,
for
very
that.
year-end, our earlier forecast was like 6,900. So it's proving to
meron
be
pa.
very resilient. It's 6,005 now. So hopefully it moves between 6,500 to 6,900 towards year-end. Santa Claus rally. Some are calling it Santa Pos.
Santa Pos.
Santa Pos.
Santa
Ay, at sana matapos na rin tong year.
Yes.
Nako, maraming salamat po. That was, of course, Ms. Tina Ulang of First Metro Investments.
Thank you. Bye-bye.
And that's it for today, November 24, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danie, Laurel. Stay safe, Philippines. We are One News, all sides, all the time.